Hey folks, we're now going to take a look at the engagement letter and understand all of the items that are going to be included in it. We have to whom do we address it? We're going to talk about the scope and the objectives of our audit, our responsibilities, management's responsibilities, any other relevant information, the report that we anticipate issuing, and then we're going to sign and date it. So we're going to deal with each one of those. So let's take a look. Remember, this is the engagement letter. This isn't the audit opinion. So it's the engagement letter. So there's a little differences and you want to remember those. So let's go on to the next slide here. First of all, to whom do we address it? We address it to either those charged with governance, or you can obviously send it to the chief accounting officer, the chief financial officer, the chief operating officer. So it can go to one of the officers of the company. They're going to be signing it as an agent for the organization. It says, you have requested that we audit the financial statements of the company, right, which comprise of the balance sheet at December 31st and the related statements of income, changes in stockholders' equity, cash flows, and the related footnotes. We are pleased to confirm our acceptance and our understanding of this audit engagement by means of this letter. Our audit will be conducted for the objective of expressing our opinion on your financials. The next item. We will conduct our audit in accordance with auditing standards generally accepted in the United States. Those standards require that we plan and perform the audit. By the way, doesn't this sound an awful lot like the actual audit opinion? It does, doesn't it? A lot like it. To obtain reasonable assurance about whether the financials are free of material misstatement. An audit includes performing procedures to obtain audit evidence about the amounts and disclosures in those financial statements. The procedures selected depend on the auditor's judgment, including the assessment of risk of material misstatement on the financials, whether due to fraud or error. An audit also includes evaluating the appropriateness of the accounting policies used and the reasonableness of significant accounting estimates made by management, as well as evaluating the overall presentation. So far, so good. Let's go on to the next page. It says, because of the inherent limitations of an audit, together with the inherent limitations of internal control, an unavoidable risk that some material misstatement may not be detected. All right, that exists. We're not responsible for detecting it. We're trying to, but we can't ultimately guarantee it, even though an audit is properly planned and performed in accordance with GAAS. In making our risk assessment, we consider internal control relevant to the entity's preparation and fair presentation of the financials in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. This happens to be an engagement letter for a non-issuer. Remember, if you're auditing a public company, then you got to do both, an audit of the financials and their internal control over financial reporting. However, we will communicate to you in writing concerning any significant deficiencies or material weaknesses in the internal control relevant to the audit of the financials that we have identified. Let's move on. Our next portion of this one, our next page says, our audit will be conducted on the basis that, and notice, that management, and when appropriate, those charged with governance, that they understand and acknowledge that they are responsible for all of these items. The preparation and fair presentation of the financials in accordance with GAAP in the United States, the design, implementation, and maintenance of internal control relevant to the preparation of fair presentation of financials that are free of material misstatement, whether due to fraud or error, and to provide us with access to all information of which management is aware that is relevant to the preparation and fair presentation, such as records, documents, and other matters, additional information that we may require from management for the purpose of the audit, and unrestricted access to persons within the entity. As part of the audit process, we will request from management and the appropriate members of the governing body written confirmation concerning representations that have been made in connection with our audit. Let's move up. You would insert any other items like fees and bills, and then we have the report. We will issue a written report upon the completion of our audit of the ABC financials, right? That's the audit that we're doing. Our report will be addressed to the board of directors of ABC, right? We write the report to the owners, the board of directors. This letter can be written to them, or it can be written to one of the officers who will sign as their agent. We cannot provide assurance that an unmodified opinion will be expressed. Remember, it's unmodified opinion when it's a non-issuer, a non-public company. It is a qualified opinion if it's an issuer, unqualified opinion, excuse me. Circumstances may arise in which it's necessary for us to modify the opinion, add an emphasis of matters or an other matters paragraph, or even to withdraw. Please sign and return the attached copy of this letter to indicate your acknowledgement of, agreement with, and arrangements of our audit of the financials, including our respective responsibilities. And notice we have it with their company, their acknowledgement, name, title, and address. So that gives you an idea of how the client engagement letter would look. Hopefully that helps. We're now ready to try an exercise.